Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filing so you don't have to. Today we're diving into the world of GiveMePower Corporation, and trust me, the name is way more exciting than what they actually do. Get ready for a roller coaster of halted real estate plans, a pivot to, well, everything fintech and a whole lot of promises. Let's jump in. This is their annual report, a Form 10K for the year 2024. Annual reports are these big picture looks at how a company did. They are like a school year book, but instead of prom pictures, you get financial statements. First things first, GiveMePower, ticker symbol GMPW, is based out of Torrance, California. They're a smaller reporting company, meaning they get to skip out on some of the more detailed disclosures that bigger companies have to make. They are also an emerging growth company. They are allowed to take even longer to adopt new accounting rules. So what does GiveMePower actually do? Well, according to the filing, they operate and manage a portfolio of real estate and financial services assets and operations to empower Black persons in the United States, a noble cause, but let's see how they plan to do that. The focus is on creating local Black businesses and real estate projects in underserved areas. Here's a curveball. Since early 2022, they've put the brakes on real estate purchases. Apparently, they saw the Federal Reserve hiking interest rates and thought that would tank real estate prices. So real estate is out for now. This gets even more interesting. This company was dormant and non-operating for over a decade. They weren't even filing reports with the SEC. Then in 2019, there is a change in control with a company called Goldstein Franklin, which appears to be controlled by Frank Iguela, who is now running GiveMePower. This is where the story actually starts. Their main operating subsidiary, Community Economic Development Capital, or CEDC, is a real estate holding company focused on affordable housing and opportunity zones. The motto, acquiring distressed properties, securing government subsidies, empowering low-income families, and generating above-market returns. Also, it appears that the company is a hedge fund of sorts, putting excess cash into trading models. Now, for the big pivot, it's all about becoming a financial technology company. The goal is to have a 1 to 4 branch bank, a machine learning powered loan platform, a blockchain based transaction system, a cryptocurrency platform, all to serve underserved communities. They're planning a cloud-based AI-powered lending platform. The idea is to use AI to better assess risk and offer better loan terms. They believe traditional credit scores are outdated. And a blockchain payment platform called Blackchain. They think Blackchain would offer cheaper payment platform and services to Black businesses. They also plan on an emerging cryptocurrency opportunities portfolio, like a wildcard crypto investment arm. They mentioned some big companies that are jumping into crypto and they want to imitate those. Now, I'm not saying any of these plans are bad, but the filing itself emphasizes that its management team has no experience running banks, fintech, or digital currency companies. The competition is intense. Banking, fintech, and real estate are highly competitive. There are competitors with deeper pockets. They even failed to acquire some crypto businesses because they could not raise funds fast enough. Okay, time for the numbers. As of the end of 2024, the company only had about $4,000 in cash. That is not a lot to run this big machine they're trying to build. Revenue, zero, zilch, and nada. Cost of revenue, zero as well, because you cannot spend if you do not produce anything. Operating expenses, about $22,000, so a net loss of about $22,000. Losses are down almost 50% year to year. Looking at the balance sheet, total assets are about $7,700 and total liabilities are way higher at $267,000. Most of that is a note payable to a related party, meaning someone connected to the company. Now for the risks, get ready, because there are a lot. Digital currency risks, risks that digital currency may be used for money laundering, risks that digital currency may not become widely adopted, risks related to cybersecurity, risks related to keeping up with technology, risk of economic downturn, risks from facing strong competition with bigger competitors. They also know they might not be able to implement their growth strategy or actually generate income from any new product. Oh, and one more thing, the SEC sued them. That's right, the company, its CEO, and other related parties are being targeted by the SEC for various injunctions, including officer and director and penny stock bans. As they say, the company believes that they are innocent. It's important to note that they plan to consult their regulators regarding its activities, but a regulator may not look favorably on the company's activities. They may limit or restrict these activities. They admit that they would be exposed to high customer concentration with its blockchain exchange customers. They are at high risk. And if it goes down, it would force them to rely on more expensive and less stable sources of funding. For governance, their CEO leads the information security team and reports to the board on a quarterly basis about their cybersecurity programs. The big risk here is cyber attacks. A lot is resting on their regulators, the Federal Reserve and the Department of Business Oversight. Any regulator may limit their activities. All their revenue would come from three main sources comprising loan product, traditional banking services fees, and platform fees from blockchain digital currency platform. They are thus particularly susceptible to fluctuations in the digital currency and personal finance market. This is a business operating in the financial services industry, so it may be adversely affected in numerous and complex ways by weak economic conditions. As a warning label, investors should not rely on this stock as a proxy for cryptocurrency. The price of GMPW may not be correlated to the prices of digital currencies. There were no changes in their internal control over financial reporting. They tried to reduce risk with cash and equivalents with FDIC insurance up to $250,000. Their success is dependent on, among other things, the development and acceptance of digital currencies and blockchain technology. They intend to approach the management of a company as strategy consultants would. They intend to acquire bank, fintech, or digital currency companies that have potential for significant growth. The company will continue to evaluate its projected expenditures relative to its available cash and to seek additional means of financing in order to satisfy the company's working capital and other cash requirements. This filing had a lot of warnings about management conflicts of interest. If the bank becomes subject to regulatory actions, our business, financial condition, and results of operations and reputation could be adversely affected. The potential cessation of LIBOR and the uncertainty over possible replacements for LIBOR may adversely affect the bank's business. Unless we complete our initial bank, fintech, or digital currency acquisition with an affiliated entity, we are not required to obtain an opinion from an independent investment banking firm. So, what's the big picture here? It appears that GiveMePower is trying to reinvent itself, to go from dormant shell to real estate company to, well, everything fintech. It is a very risky proposition, and the company's financials don't exactly inspire confidence. The regulatory risk is significant, and the management team lacks experience in the areas they're now targeting. Even if their hearts are in the right place, it may be an uphill battle to realize their goals. The SEC investigation does not help, of course. That might be the largest risk and reason to pause and wait and see. Thanks for watching. If you found this deep dive into the world of GiveMePower interesting, don't forget to like, comment, and subscribe for more corporate decodings. Let me know what company you want me to investigate next.